All right, so we're looking at hold on, we are looking at indices right here, and this is Nasdaq. That's the one which I am looking at right now, and this is the present contract. And now hold on, NQZ 2023. Okay, so we're looking at a fresh chart now. What we see right here is we see this high taken out. I just want you to see where we are at so that you understand, so it'll be easier for me to show you what I'm looking at real time when we know exactly where we are at. So that, and then there's bearish order block which we didn't quite hit, but we are just looking at that this way. Okay, so that, and now what I want you to look at is this one right here. This. So now we're gonna mark this as our buy side objective on hourly, and then I want you to see what we did this morning as the CPI numbers came in. So these were liquidity, but mostly it was trailed stop losses. So whoever were long from down here, they most likely, when it goes up here, here, and up there, they would, yeah, that would make sense for people to trail their stop loss, and that's what the smart money would target right here. And then we got that big expansion right here, and then we're gonna look at 15 minutes now, knowing that this is our intraday objective for today, before we can say that okay, we have our target hit and now we have to wait for what happens next. So on 15-minute, while we were expanding, we went ahead and leave this small imbalance, and see how beautifully we came down, tap, and then slowly we're trying to get back down to smaller time frame, right? And 5 minutes. So in 5 minutes, yes, we do have these imbalances, but that doesn't need to get filled right away. It can wait. We are predominantly bearish on indices, so we can come back at a later time and then take all these buyers and all together, like down here. So that would be our objective on the weekly basis, to get down there. But currently we are looking, we just need to focus on the order flow, and the order flow is looking bullish. It's looking bullish, like really good. So 5 minute would be the time that I would say is giving you like kind of a better price action. And when you start going to 1 minute, there's a lot of manipulation, there's a lot of chop, so try to do all your analysis and looking at the price in 5 minutes, and only come back to 1 minute if you need to refine your entry, say this. So if I would be looking at this push down and then the liquidity taken here, so this candle formed, and then we have a couple of indecisive candles. So after I get 1 2 3 and then that push up, I would, depending on your strategy, what you are, once this candle closes anywhere, but the most important thing is your stop need to be below here. That's all that matters. You can enter anywhere. like it's best to enter below 50% ideally of that push down, right? This below 50% would be a good place to enter, and we got that one more push down here below that 50%. So now we are looking at expansion, and looking at expansion, this area right here, we're gonna label that as, so it is lunchtime right now, that is AM session high. So we're gonna create that alert, and then we're gonna type same thing, AM session high. Let me check. Okay, yeah, that was AM session high. So now I want you to see, we are just expecting price to go up, and we're looking at the bullish order flow from bottom. But what we cannot neglect is, what do we have above? So we have a bearish order flow that pushed price. So whenever this like 3 big red candles come in, and there's a green candle that took out some high, like some of the stop loss, but not really stop loss, that's internal liquidity, and then scared a lot of people, trapped a lot of people, like thinking, oh, it might go up. And also, like, there was a very good indication that was gonna suggest us that, oh, it might keep going up. There was imbalance right here while we were expanding, and then that acted as like went down, and it faked that it was going up, but again from here we plunged, right? We plunged. So now just looking at that, and just looking at this candle like going up and down, don't let that distract you. Just focus on the big picture and don't have FOMO. Like, I mean, I know it's tough to like just say that, oh, don't have FOMO, but you know, like, we're all human, it happens. But also it's most important for you to understand where in price action we are at that moment, so that we don't lose focus. And also, if we drag that across, so now that fair value gap, which was supposed to help, or like which was supposed to keep the price up, once it came down, see how this is acting as an inversion, and it's keeping the price down. And also we are coming from here, bearish order flow. How we can start anticipating bearish order flow is after this happens, after we get below that, because until we like, so just following structure, right? So let me quickly, so this was a short-term high, this was a short-term low, and once we break that right here, that became a short-term high, and this was the short-term low, and then we came down, and then once we went up again, so now this is our structure right here. So that is the point that we are looking at. And now once we get break of that we can call that a change in state of delivery. So we're gonna mark that as CSD, change in state of delivery. So now it is not that, oh, we are gonna go down, we're dumping, that's the end of this and that, like end of the run going up. No, we are just reading price in a certain way, and we have to have a bigger picture in higher time frame and know exactly what we are looking at and what areas we are looking at, right? So just looking at that, what kind of PD arrays do we have? So this one, we are, if we had taken this entry or anything, right, which I did not take, and you know, I was just looking at, but stop would go to break even, and if anything we would be stopped out on break even. So I would not want to take a loss on this trade, but I would just keep it just in case right around here, because there's an imbalance that started from right here. So sorry, so either it should respect that imbalance and keep going up. And also, mind you, we are in lunch hour now, so the lunch macro that starts from 12 a.m. 12 p.m. sorry, that is right here. So this from here is a lunch macro. So from here we started, the prices started moving in a certain way that generates more liquidity. Lunch session, what it does basically, it just creates more liquidity to get run in the PM session. So now, so we're gonna go back. So we're not gonna keep dialed in on 1 minute chart and then get lost, in that chart. But so this, you know the idea. So we will come back to that and see if we find any entry. But also the area that we should not forget is how we reacted after we hit that. This area is really something to watch. So that last down push candle, after which we started to go in other way, and then we came down, created a short-term low and made it look like we were gonna go up. We went there for a little while, just grab some liquidity, but we gave up the ghost and came lower. So now we're looking at bearish order flow. We can still look at the buy, but if you are looking like to scalp short term or make quick in and out kind of move, right? So what would be the easiest target for us to get would be this liquidity down here, because now everybody that was chasing price, trying to take it up, now they all have their stop loss jammed right below, right here. So that would be sell side liquidity. And like, we are not trying to get intimidated by like 1 minute candles, but we're just reading price. And then, today's CPI, there's going to be so much of manual intervention, as the mentor ICT coins that term as manual intervention. So now there are people, they're big money, like who have a lot of money, like bank traders or big hedge funds. They have millions, even billions dollars to pour into the market. They can take the drawdown, but we as a retail trader, like not smart money minded trader, I would say not exactly retail, but smart money minded smaller group of people where we cannot make a significant change, but we can position ourselves like alongside of smart money, and read price and just mimic what they are doing. So if they are making money, we can get on their side and we can probably make money as well. So it's all about reading the price action, anticipating, and then risk management. How much am I willing to risk? That's the most important thing. So before you get onto a trade, you set aside like, okay, this much amount of money, whatever that might be, whatever makes you feel comfortable. And sometimes it might be like, oh, you know what, I can take like 1%, I can take 2%, but when the price starts coming down, you start getting uncomfortable. So what that tells is, even though you told yourself that, okay, I'm ready to take that 1% or 2% or 0.5%, your mental capital, which is another different thing from you assuming risk, because everybody assumes risk when we put on a trade, but our mental capital is something that really tells us how much we are willing to lose. If you start getting in some drawdown and that makes you feel uncomfortable, and it starts to make you think or doubt, or like that makes you double think about, oh, what's going on, like maybe I'm wrong. So that means you are over leveraging, or your mental capital is limited to that amount of money. So that in that case, best would be, if you still believe, or like if you think and then you want to stick on to the trade, but also many times you'd be like, oh, I want to get out here, I can't take it no more, and then the price reverses on you and then goes to the direction that you were expecting. So best thing to do in that case is cut down the risk to half. So Now if you were taking X amount of risk, say $100 or $500 or 1,000, whatever, so when you cut that while you were going down, now you are only risking $200. Maybe you would be okay with that if that still is a case where you don't feel that you can take it. Your mental capital is too small. Like you're just probably over leveraging. Just cut that into half and see what it does. And when you do that, you would be able to focus on the price action rather than just the money part. And always try to look without the money fluctuation part, and just look at you on like based on your trade idea. So now we're reading order flow and looking at that, we're getting some kind of like reaction, but this still we are range bound, right? So if we had to make any decision right now, like now, it would have been this candle right here, but we got that and then we went up. So we have our target AM session highs, and we have the buy side objective all together up here. So now we are just going to see if we can get that, and we mark everything. Where we are at right now is that inversion fair value gap, which kept the price down. So if we want to see, does that still hold the price down, or is it ready to pierce that, go up, and like this. Now once it goes up, does it hold price? That's what we are looking at. So if you feel comfortable, like you need to definitely have a model, right? So once you have a model, say this, and then okay, maybe I'm gonna risk like 10 points TP1, let's say that, like 1 is to 3.5, maybe you leave a runner, and then so this right now is framing your model, what exactly your model is, what exactly you want to see in price action before you can engage with that. But before that, you need to see some kind of validation that okay, maybe the price is ready to rally, or it shows you visually that okay, the price is going in one direction. And it is important not to chase price. That's what happens when you chase price. You lose money, and you lose extra money. So with chasing, there's bigger problems. So when you chase, instead of having a 10-point stop loss, right? Now if you chase and you say that, oh, I wanna buy right here, now your RR, risk to reward, is 1 is to 1.3 something, even if you ever get there. If you don't, you're literally risking more than you are gonna make. So that excuse me, okay, so that is not a good thing to do. So now you might say, oh, I missed a trade or this and that. Like, no, not really, because we are just in 1 minute. So now what I want you to do, we're gonna leave everything in here in 1 minute. So we're gonna do current interval only, and now we're gonna go zoom into 5 minutes and see, did we really miss anything? And it looks like we have not, because the 5 minute, the price action is still balanced. We don't have no imbalances, nothing like that to actually enter the trade. All we had was we got that 15-minute pull back up, a red candle, and then we are trying to see what this does. So we really so this is for swing trading or like intraday trading. When you have, so see how this, like the recent high was looking so far away when you looked at a 1 minute, but when you go to 5 minute and 15 minute, then you see that it's right there. It's not even a whole lot far away. So looking at the bigger time frame calibrates you to a bigger picture, which is very important, that you need to see a bigger picture if you are trying to do anything more than a scalping. Like, if you were scalping though, like, I mean, yeah, go ahead like this, probably like when it comes to this order block right here, get in right here, stops below here, and when it goes up here, just close it out, and that's it. So now what we need to see is we got the reaction from this order block right here. I'm gonna put that as this sign right here, dot, sniper dot, and now I'm expecting similar. Let's see this. I'm expecting is something different than actually pushing the button. Like, we're just looking what it does. So now if I were in any position from down here, if I had any kind of position, you know, this would be a good area for me to take something off, you know, so that I still have something even if it reverses on me. So all this was creating some liquidity, went back down, balanced the price, and expanded up, and now we are in this order block. We're in short-term downtrend unless we go above that and then a candle close above the 50% of this order block. So let's say this, right? So we are exactly at that 50%. So that is precision, like sniper level precision, 50%. So this is an order block, body to body. Once we get a candle close above the 50%, that would be a red flag, like, oh, maybe this order block is not gonna hold. But that's not everything. There are other facets that you need to look in order to say that, like, to make a final decision per se. So now that 50%, unless we get that, it can do any number of things and still be indecisive, because that's what we're at right now. We are not. If we were taking any position, it would have been down here. Once it came into this short-term shift in market structure, like once we break that with this candle, and when we get down in this order block, that is one. And after that, we don't have really so much data at this point to exactly say that, oh, it is going to do this and that. But we have a strong conviction move from down here that we did from a 15-minute imbalance. So now what we're going to do is we're going to make a projection to see where likely we are gonna get. So from here to down here, this was that manipulation, and now we want to see if we can get like a 2 standard deviation or 4 standard deviation, and see if we have any PD arrays supporting price at that level, and then target that as our take profit objective, just in case, like not just in case, like once we get up. So we have 1:2, so that's basically 1 push down manipulation and 1 push up. That is 1:1. But if we look at 3, like 1:2, so they manipulated 1 whole thing down, and if they're trying to take 2 up, that would put us up above this high. That looks legit as well. So we're gonna keep that, and we came to that bias, and now we're gonna keep that at that, and then we're gonna mark 200% as well. So we're gonna use profit objective, and that is the black is just liquidity. So now the job of extension is done. Actually, we can do one more thing, guys. Hold on. So what we can do is we can look for an entry. So if you are a fib based trader, you have so much tools that you could use. It is just amazing. So now what you can do is you can mark the whole manipulation legs 50%, which is right here, which also happens to align with this fair value gap down here. So we are just waiting. So this got invalidated, and so now we are looking for up move. That's that's kind of like, we cannot say confirmed, but we can say that we are getting that indication. So now 50%, that comes right around here in that order block. So now once it gets down here, anywhere below this, and I don't want to see that break down here. It would be ideal if we didn't see, because see how the imbalance in price from here all the way up until here, that's all balanced now. So we don't typically need to come all the way down here if we are still gonna go up. So I'm not sure if we're gonna get that, but we were gonna be looking at that, and then once we get that, we are gonna snipe that, and then we know exactly where we're gonna take. So now I'm going to take this off and just gonna take it up here, because that manipulation leg up came down, and then we dilly-dally around for a while, but we still haven't broken structure, like we haven't physically went up there. So now that and this down here is my structure. So from down here to up here is my structure. And now, like looking at this, you might feel like a certain way that okay, it's going up, but we have this imbalance that makes me so uncomfortable to buy, knowing that there's an imbalance, because if I do get an entry up here, it can literally reach down all the way down here, clear the board, and then resume going higher. And then if I went anywhere in here, that's the part where patience comes in. If it doesn't give me that, guess I saved my money instead of risking. So if you don't have a solid plan that allows you to get in here and exactly get out, but the most important thing is exit. Like, where's your exit at? If you were chasing price, and then if you're taking some kind of profit or some position off at this area right here, that's good. Try like working on that model and trying to get a better entry, but no entry is good nor bad. It's just about how you manage it. So if you have that model, perfect. But if not, I would like the price to come down here, which is, I don't think it's too much to ask, given that today is the CPI day and there was a lot of inflation. Like that's what usually is. So if I don't get that, I am not taking any risk per se today. Like I'm gonna preserve my capital, because that's the number one goal. We are preserving the capital, because if we do not get our model and we are still trying to go behind it, that means we're desperate. We're desperate to make money, and being desperate is never good, because nothing good comes out of desperation. Instead, you need to feel empowered, like okay, I'm gonna demand the price to come down there, so that I know like where exactly I'm going to enter, where exactly I'm going to exit. So this would be if I were to take any new position. So that would be my TP1, because that's the area that the AM session high, we still didn't get up there. And now see, because we just grabbed this liquidity from up here and we're getting that reaction, and then I want to see that come down here, like at that imbalance, because that price is not balanced, ladies and gentlemen. That price is not balanced, and we would want to see the price come down. And I demand, why I said demand is I'm willing to put something in as an exchange. Like if I'm putting any position, I'm like putting my money in the market. So when I am putting something in, that's fair, I guess, to demand. But also I'm willing to give that money if I'm wrong. So that acceptance of risk is another important thing. Like you cannot be a trader with 100% strike ratio, that just does not happen. You are wrong. Like, the market will prove you wrong, but the only difference is, will you accept that? And, like, okay, maybe I was wrong. Then what did I do? Just looking back, reflecting on it, like, what did I do wrong? Like, just making it better, so next time when you are at that same situation, you are like, you can refer back to your past experiences and say that, oh, that's what I did last time, so this time maybe I should not do that, or maybe let's not do that. Like, that's the proper way. So mindset is most important aspect in trading. It doesn't matter, like, you get the entry, this and that, but if you are not managing your trade well, you don't, like, know where you're gonna hold up until this and that. That doesn't mean anything, guys. So now in 5 minutes, right? So we're looking at this, and as well the lowest down close candle, we're looking at this. This is a really good area in 5 minutes to get an entry. But do we get that? Time will tell. Like, in 1 minute, in 5 minutes, it's giving us the entry. But when you're looking at 5 minutes, right, you cannot validate that idea until the 5 minute candle closes. So you gotta wait until that candle closes. And 15 minutes too, the same thing, right? Right here, it came down, touched it, and now it's having some kind of reaction. So yes, the 5 minute candle closed, it came down all the way, had a tiny imbalance here in 5 minutes. So this candle, and this made a tiny fair value gap down there, which it completely overlapped, balanced that order block, and now it's trying to give that push up. So looking at that, sometime you might be asking too much, but it's okay. It's all about reading the price, right? And not chasing it, reading. So if this was it, now what I would like to see, and I don't mind that I didn't get in, because I have got in so many times that these kind of situation, I chase price. Oh, I just saw that 5 minute hit and now it's going up, and whenever I tried doing that, it did not end up good with me. So now I'm ready and willing to let it go, because if I didn't see that, or if I didn't, that was not my model, because at 1 minute I was looking at down the bottom imbalance. So if it didn't come to that, I should not be pushing the button at all, right? So now we got that, and now we kind of got the confirmation. So now we're gonna look at this. The opening price is a very sensitive part, right? So we're gonna see if we can get any reaction. Okay, and the way it is coming, so if that would support price, like, you would need to see price getting repelled. So if it's going to push up higher, it first of all shouldn't have done that. That's not something that I'm willing to see. And if the candle closes below 50%, we're not even gonna pay attention to that candle right there. Like, it's not good. It doesn't characterize itself as an order block. So we're gonna wait one more candle and see if it is trying to repel higher, or it just dumps down and maybe gives this entry. Now if we do get that, now we might have a trade idea. But again, if we did, and then we would have to be very, 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 I say very 3 times, because you have to be very, very, very careful, because this is lunchtime, like 12, after 12 to 1:30. That time is a manipulation time, so you don't want to get chopped up at that time. And then when the real time comes after like 1:30, when it's the PM session, and then it can resume the price, going in its natural way, then you would not want. Okay, so just we're not gonna look at this no more. So this is done. Now we would expect the price to get below here, we would expect to see that, and I demand the price. If it gives me that, I would be interested. If not, I'm just making note and just studying the price. So if it does not give me that, okay, I'm just learning. The market is trying to teach me a lesson, and I'm open to learning. And once you learn, you can drop that L and earn. Yeah, so meanwhile, while we are looking at this, I would also like to take a look at some other correlating assets. Like, let's see what Dow is doing, right? So same thing, we look at the 15-minute. Okay, the Dow, the weaker one. So see how Nasdaq, we're going up and trying to push up, but Dow, we just spiked up, but then we're just not doing a whole lot and just going sideways, trying to slowly gravitate down. And there's this 15-minute imbalance which we came up to, then try to go a little bit up, but again we fell short and we're just coming down. So looking at this, most likely that's gonna go down, and S&P is doing the same thing, even though we got that 15-minute reaction from here, where it just came, tapped that right here and gave a close. So it opened, went all the way up, then came down, but it pulled back up, made it look like it was bullish and it was gonna go up. And if it were to do that, the next candle should have slowly been like say gravitating up, not down. So now this, I'm glad that I'm not in any position. So you can kind of see, if you are not liking the price action, you don't have to trade. You can just watch and observe that. Also, there's another thing, yesterday's spike up, taking all that liquidity, and even this. So here is a lot of trap money that was up here, and that's no small volume. That's like big volume that would make that. And when we came down, it's gonna go up to mitigate that positions, right? So overall, all the indices telling kind of the similar story, that maybe we're not going up just yet. So now we're looking at that, coming back to 1 minute, right? So now that, knowing where we are at, 15-minute, like, see, we're in a choppy environment. So this, even though in 1 minute it might look like it's a good trade, but knowing a higher time frame structure, like 15-minute is doing this, 1 minute, like 1 hour, it's sure it's trying to push up, but like it's right there, like it's just wicking too much. So this is annoying me. So hold on, I'm gonna change this, and below, yeah, I don't want to see that in high time frame. So this, so it opened right here, went up, but it failed to make a high, and came down, but it's also not going below that. So we have buy side up here, and we have sell side down here. Which one do we take first? I don't know. So that's why sometimes we need to sit on our hands and see what the price is gonna do. That is inversion fair value gap. So when the price like was going down, it's kind of like the fair value gap, not really inversion. We cannot say that yet, because it's the imbalance was created when it was going up and still keeping the price down. So it's technically like a fair value gap. We just don't have that information yet, that it want to act as support and push the price up to act as an inversion fair value gap. So knowing that would make me not want to do anything at this point, knowing where we are at and in price, time and price. We are at lunch hour and we are at weird price. So I would not do anything. I would just observe. So even though we are close to getting that, I don't know, like, and I'm okay missing that entry, but also I would want to take it like a small say a class C. You have that's what I do, like class A signature setup. Class B means not exactly, doesn't have everything that you're looking for in a trade, but it's kind of giving the confirmation that it might work out, and that happens sometime. And it's okay if that is something that your model permits you to do and put on risk, and you have a proper risk management set to that. A little bit lower risk, whatever you are willing to kind of, get in and see if you want to do that. I usually don't like doing that, but I sometimes, like maybe it would work out, maybe it would not, like I need to have all that characteristics of a good trade, and maybe sometime the time is not aligning. That is something permittable, like, it's okay, because it, even though like the algorithm and most of the thing runs on time, sometime you get that hunch or that kind of feeling that, oh, it might go up, but I don't know, like, do I want to take risk? And in that case, that you need to lean on your experience, your past experience. What has it been for you? And that definitely comes with experience. So now that would be a breaker, right? For me, at least, how I look at it, went down. Not really. I mean, it's not even called a breaker. I just look at that candle. I don't know exactly what it is, but it's good because I've been observing that that does have some kind of reaction, and I want to see what it does. It might not be, but that's how I see. So now we're just looking at what it does, and majority of the time. Okay, so that was one person within this up move structure that grabbed some liquidity. So this, we came down, we went up, like so. From here, the smart money reversal, this was high probability sell from here if the bias is bearish, and then if we are gonna go down. So until then, we're just gonna have to see. That imbalance is looking juicy. We'll just observe price. So it's also important to clean up your chart the way that it doesn't get overwhelming and then you completely lose track of what you're looking at. So now that has done its job. So that's done its job. So usually when the price gets above liquidity or some structural point, I'll remove that auto block, because this liquidity take precedence over the auto block, and this is still, so I would take that off too, because we are still reacting off of this. We have not done completely mitigating off of this auto block, so we keep that one auto block, and we went above there, and we are in lunchtime. And once this happens also, I would remove that also. And now within this, okay, we got a reaction from there. Now that would be something that we would be looking at, and don't let this fool you. This move up, I don't trust that. If you want to go without me, fine, I will just wait right here. And also, it's important to see why it's doing what it's doing, right? There's imbalance to the upside that needs to be balanced. It would be perfect if it came up there and then dumped down. So not losing focus. So while we were going up, that was a fair value gap, supported price, keeping the price lower. Once it's going up, and then slightly came down, and now we are still in that, so we don't discount that. And now it has kind of done its job. It's just one time thing, like, so we're gonna remove that and see there's imbalance. Now we're just waiting. So the more the price doesn't want to give me that, the more confident I get, because most of the people, or like, usually psychology is like, oh, maybe it's not gonna get there, or maybe just let me just get in here and jam my stop loss right below here. So that I just don't do it. I just look at it and say, if you want to leave without me, fine, I will get or catch another move. Because in markets, like you see, moves all the time, and especially if you're like on 1 minute. Yeah, so right here we have not done anything. We've just been consolidating the whole late AM and then lunch. So I am expecting some kind of movement, at least some, not this lethargic move. And it would be ideal if it was to the upside, but we still haven't got that confirmation, so there's no entry for us to get to the upside, because we have taken out a big liquidity from that was trailed from here, and right here 6 to 17, that was like 11 points. We dropped down into that, and then we're going up. So if we buy down here, guess where we should be selling, or where we would be selling? At least up here, or altogether up there, or even better, that is a daily order block open right here, which we have not got to yet, and we have not forgotten about that. So daily bearish order block. And as long as on the weekly, when we're looking at weekly, it's the same thing. We got a reaction from here, so once we came into this, we got a rejection, a bearish weekly candle. So just off of that, I want to see price go lower, expansion to the lower side. So as long as we are selling above this point on a weekly time frame, let's just say like this is weekly open, and now we're gonna view that across throughout the week, current interval and below. So now, just after having all those lipstick on the chart, see how the weekly open is, see all this around the weekly open. So this was the initial area of consolidation, and if we want to see a fib thrown at here to here, so from here we manipulated down and then we expanded up. So this 1.5, and that's 2 times, which exactly lines with this right here. So most likely we might get up there, and also there's order block, there's liquidity, there's everything up here. So now we kind of have our target up here and up here. Now we need to find the entry, but we are not getting no entry because it's the price action is shit. It's just consolidating. So now what we do, we just wait on our ass, do nothing at all, and just let the price show us what it want to do. It's all time distortion. They're just using time to get the human emotion come on the way and push some kind of button. And when you push some button, you are risking your equity on that. Maybe it's a buy or a sell. Some people might see buy, some people might see sell. So that we're just gonna watch and observe. I still, so the farther it gets up there, the more confident or more willing to buy I would be down here, because then there would be people who are chasing price, came down. Oh, this is support. Let me buy up here. Jam the stop loss where? Right there. And then we have targets up here that's looking very, very good up here. So we are going to just wait on that. And trading is the game of waiting 90%, and 9% is it's let's say it like this. It's most of the time you gotta wait. Patience. You gotta wait 90% of the time. And then there's another part to it. Like 10% is only actually doing something, like the time that you are in a trade or managing a trade. And even in that, there's like trade psychology, trade management, like what is your take profit area, like what are you gonna, where are you gonna take profit at, what is your stop loss, what are you gonna do if this or that, if if that statement, just like a robot with no emotions, like what am I gonna do if this happens, that's human emotion. But when you take that off, it becomes so much clearer, so much easier. Let's say for example, I had that, like first thing is the price trending up or down. First thing is it's not trending, it's consolidating, so that invalidates anything moving forward. Say if it was trending, or if we see that, oh, the price is going upward or it's trending in up direction, then we move on to the next level, like do you have a target, or what is your draw on liquidity, because that is most important thing before even entering the market, like where you are going to exit. Knowing where you are going to exit before would add so much confidence in your trade, and it would be easier for you to hold on to your target, or like have a clear sentiment of like what exactly the market is doing and how it's gonna do. So just looking at that, okay, that right there blew through, and it's okay. Like at this point, like today, knowing the day how it is, now we are just watching. So once it goes above there, we would have to take some of these out, right? So we're gonna take that one out, so we're not expecting. So once that area is hit, I'm not super confident on this trade. Not like super confident, but I don't want to take this trade now, because my target was up there and that got hit. So my target got hit without me, means it can come back and reverse on me. Like it can just, this is liquidity now right here. There is like stop loss. So many people who were able to like capitalize on that, they probably move the stop loss here, or any structural point. Then we have another one here, and it can come back all the way down here. So if I was not in that trade, I wouldn't be doing anything right now until I have instructions of what is going to happen next. So now when that happens, what we do is we remove that. We try to clean up our chart, because that doesn't mean anything now, because if this was an order block and this would keep the price down, it wouldn't let it go above 50%. Like it barely just was up until 50 here. It was giving that, but once it blew through that, now that is invalidated. So now we are just going to anticipate. Okay, now this buy objective is complete, so now we are going to look at this. So we're not even going to look at this anymore and just discount that altogether. But what we are going to keep is this open imbalance below this liquidity. We're not even going to look at this, because if we are if it comes here, Nasdaq, the bullish of all three indices, if it comes down here, I don't think personally there would be anything that's holding price to not get below here. So this is the most amount of retracement that I would expect to see if we are still gonna continue bullish. So now 5 minute, and then rules, right? Rules. So we have broken this structure. Now that makes this from here to wherever that high would be formed before we even start that retracement. So this would be the new structure here. So when that structure gets broken here and we start going down, then that would be a CST, change in state of delivery. So we were delivering price up. Once we get below there, we can anticipate all the up candles supporting price and delivering price to the downside. Yeah, this is, it's not like super clear ideal kind of day for trading, but I still wanted to do that just so I can track how I am looking at this market at this point and use that to my advantage in the future. You know, like knowing how the market reacts, the way it reacts is very important for you to be able to put any kind of risk in the market, not just money but risk. And risk can be anything, like, you know, your time. You are wasting your time if you don't know exactly what you're looking for and what you want to see. And if you don't have that experience, it's okay, time will teach you that. But you got to be aware of, you know, where you're at and what you should be looking at, and be keen on learning that before you start doing any kind of anticipation or like, oh, I wanted to do that, but why do you want it to do that? What's the reasoning behind that? What's the narrative? Like, now as we said that we got to that objective, the market maker buy model, now we will look for a market maker sell model right here. Now that is a little bit more higher probability because we have a clear target down here. So now we would jump once it gets up here, right here. I like this idea. Okay, we're gonna take that, put the stop loss right here, and remember this is paper trade, demo trading, but you know, if you know, you know, demo trading is something that can really help you, and I hope you use it as such. So now we're trying to get, so this is basically our trade idea, right? So we are risking 13 point if, and this all, it's okay, like, I mean, it can just rip through, and that would not be something I would be going like full on risk, but I'm just trying to see if we can get the market maker sell model and get below here, or altogether I'm looking at below here. So we'll just keep it at that as a TP1, or at least the area where we can safely move our stop loss if we only had one contract. So while we're looking at that, we're gonna see Dow. What exactly is the Dow doing? Dow is, it's look like it's expanding, right? Okay, it went up and now we're having that. And S&P, same thing, it has so much liquidity to the upside which it haven't grabbed. So now just looking at that makes me think like maybe it wouldn't work out, and I would be like, it is a low risk sell and it would be okay if we don't get that, because now we understand while trading though you need to see multiple correlating assets and see how it's doing. And now looking at that, now I don't feel comfortable and I should probably get out. So that's my thought process, just looking at that. And then, you know, like, oh, it's starting to go down, it's useless. So now I'm looking at this right here, that's immediate rebalance. So if I get reaction off of that, right, That would make me super uncomfortable. Super. So now I'm already moving the stop down here to that previous high. That's the liquidity pool. And just waiting. So once we get that break, right? Once we get that break, now we are observing price. Wow, yeah. So now this is uncertainty in trading, right? So now if that would be an order block, the way I look at it, so this I don't have so much confidence looking at other indices. So now I don't want to see that come back up here and try to stay here for too long, because that would mean like, okay, it came down here, now it's maybe it got to that, it hasn't, the last put down push candle right here. So now we are in uncertainty. So now I would have to do active trade management. I would have to literally, if I see something that looks funny to me, I don't want to even be in that trade. But up until then, I'm just gonna keep trailing my stop, because I don't want to see that go up above there. So now my risk is from here, that is 8.5 points. With the spreads, if you do CFDs, maybe 10 points, right? So to get the 23, so once we get down here, right, this is done. Like, this is a scalp, and I'm not looking to take it all the way down here. Like, I'm not expecting that for this. I might get that. If I do get that, though, like, it's okay. And most of the time, right, so the trade, that doesn't look like, oh, maybe this is not gonna work, and that would be exactly the trade. That's the psychology part. Like, when majority of the people cannot see that, that's when the move really happens. But that don't mean that, oh, you don't see the trade, just go and push the button. But trust your analysis. Like, okay, this was the order flow and this was the liquidity. So once it grabbed that liquidity, we are anticipating some kind of return back into that area, or say structure. So now what we did is, so here what I'm looking at is we just created a fair value gap right here. So now I want to see, if I don't get that fair value gap respected, I'm done. Like, I don't want to be in this trade. I'm aggressively managing this trade. So it can come up here, but once we start getting to the halfway point, or if we get past that halfway point, I would need to see like a quick, like, run down reversal. Like, if that don't happen, it would make me uncomfortable, and I don't mind closing this trade manually. But also I would have to allow some kind of flexibility if I want to see some kind of result. So if I want to see that go to my take profit, right, I would have to allow some kind of risk. And when it becomes uncomfortable, that's when majority of the people would be willing to take off, and then they exchange orders. So they sell, or they they are selling and then they buy. And that is exact time when the counterparty, the bigger party, that takes the opposing side of the trade and takes it the other way. So as I said, like this, the lower quadrant, like 0 to 75, or from bottom like 25, from here, if it starts going down, that would convey a message to me that, okay, maybe it's heavy, like maybe it want to run down there. But now this going up. But before I do anything, I have a rule. I have to wait for the candle close. It can wick all the way up and take me out. Right now my rules doesn't allow me to close the position right here in the middle, because that's the mistake that majority of us as a starting new trader make. So you have to see that candle close and then decide what you're gonna do. So now it's up to that 50%. So now if it keeps going up, ripping above, I would take a small loss and I will close that right there. So now I know that it wicked at 50% and closed below that imbalance 50%, which is also this order block. So now looking at that, now I can say that okay, this is the max risk that I'm assuming. So basically I'm not willing to risk anything in it anymore. So if it takes me out, guess that was not my trade, or I took a small loss, like, you know, in order to capitalize on that, and it looks good, not gonna lie. Okay, so now that just took me out, and it's okay because I did not feel comfortable and I managed my trade. So we look at S&P, same thing, so much liquidity to the upside, and this is just psh, gone. Dow is a piece of shit. It's crazy. Got support off here, trying to go up, like not really. Yeah, it does not really have a whole lot of structural points where you can look at. Yep. So we're still gonna observe that what it does, you know. Yeah. And if it does and give me that, fine, it's okay. I would learn from that, and I don't know if there's anything to learn, but it's just, you know, maybe not take that trade altogether because that was not my trade. That's not, and you know, I'm trying to like frame up a setup, you know, because I think I see something, but I really don't. We are still in this big sideways movement. We haven't gone anywhere. We've just wicked. We've taken some sellers out, but still we are right there. So as we're not gonna waste too much time on this and just keep this one here. I'm gonna remove that. We're gonna clear up our charts a little bit. Okay, so this was the idea that we were looking for, but we got stopped out. But we want to see, do we get that? And it's important to not exhaust your mental capital, as I said earlier. I think I said to not waste your time when there's no setup, and when the time do come that you can clearly see the setup, and then you're like, oh, maybe I don't know if I should take the trade, this and that. Like, no, just save yourself from that, and you know, just focus on the bigger picture. 15 minute, nothing, like not a single thing that entices me to get in and try to look and try to go somewhere. So I don't know. We'll look at dollar, what the dollar is doing. Look at this, same thing, but I'll give you my thoughts on that. I am definitely looking for dollar to get up here, this whole area, and if we get a tap on that imbalance, sweet, that's the perfect thing that could ever happen. And there's inversion fair value gap also, so that right there, so much confidence on the dollar. So unless we get there, not really bullish on dollar intraday, like short term. And then we have beautiful target up here, which is looking juicy. We recently took out this right here, and there was a small volume imbalance right here, some area. You don't need to exactly know, like pinpoint, okay, exactly that is where it's gonna go, and then it's gonna turn down, and then it's gonna go from there. Like, you don't need to predict 5 steps ahead of the move. You just need to know the general direction and be prepared when that gets hit, you know, then sit on the sideline and demand for more price action. So that's what happened there. And what happened today was we got this small liquidity grab during that news time, 8:30 CPI wicked up, and now we're trying to get down, which perfectly lines up. If we can get down here, here, I don't know, that would be too much to ask. I don't know, I'm just reading price. So if we do get in this 1 hour candle, that would be everything. I wouldn't need nothing more than tap and like maybe 25%, not even like, you know, anything less than 50. Just need to tap here and just run. That's all I'm looking for in dollar. So short term, dollar bullish, dollar bearish. Looking at AUD USD, same thing on daily. I want AU to give me that, and if you want to give me even more, that would be super sweet. So looking at dollar for intraday, at least for short term, some kind of retracement down, I could either get that one, or if you want to get aggressive and AUD has some news, and you know, and that, you can give me that and I would take it. I would take it and run because we have a nice liquidity to be grabbed here, right here. But before that, the weekly consequent encroachment, the 50%, that comes before the whole thing, right here, which also is kind of like this double bottom right there, looking like a double bottom, right? EU, same. So we have a small on weekly. On weekly, that's where we're trying to get for not leaving any imbalances. So if we do that, sweet, that would be awesome, because then we would not be leaving any imbalance on a weekly, so which also is this. And now I want to tell daily that, so if we get mitigation of that open on the daily, that would close the weekly potential imbalance, and then get on this daily order block. And then I'm not looking for this no more. That is another imbalance on the daily, but it would be better if it is left open right here, because it is within that big order block, and then that could be left as a target for when we turn around and try to go upside. That would be ideal target for then. Well, that's what I'm looking at. And this, if we do get that. Okay, GU, not so pretty. We had a small imbalance, not really, and then it is completely closed. So see weekly if we have anything. Okay, maybe we can expect this, or if we do get a little bit of craziness up there. So that weekly level comes to this in daily level, right? So either this, because we already got that tap, I think we did. We almost kind of did. Almost. Okay, it's okay. So that is that. And lastly, the only thing I would even consider looking at is this. Okay. UCAD on a daily, that is daily bullish order block. So yep, the weekly, there is no imbalance on the weekly unless we get below there. but looking at dollar trying to run, and then we can see that up there, this short-term retracement is completely okay, and then we got that, and then we'll see that in hourly. Okay, we got that. Oh, perfect, right there. And see how we even tapped the area from where we started expanding. So now that tells me the story of a bullish dollar. From here we came down and then tried to go down, didn't, went up, expanded. There was imbalances, open imbalances down here that we got balanced today, this morning, and that imbalance just got filled right here. So that's it. So now we are expecting, this is really at a good level right now. So guess what we're gonna do? We're gonna set up some alert, right? Some kind of alert. So we're trying to go, the least we're trying to go is 15-minute. Nothing lower than a 15-minute. So couple alerts, and how we can catch this move, right? So we have that, a lot of liquidity, everything to the upside and downside. Perfect. Okay, so we would use that bottom one as our stop loss. Yeah, we should not get below, that would be our expectation. 34.96, 34.21. Okay, that would be too much, so we're gonna have to improvise. We're gonna follow. So if that is too much, we're gonna let it do its another leg of distribution or another leg up. So we're gonna go back to 1 hour, and what do we see? It's so choppy here. So now we're gonna come back to this. We're gonna come back. So we have 39 minutes. We're gonna set an alert right here, and we're gonna say watch 1 hour. So what I would like to see is if we can leave this imbalance here, and then in the next candle from the next hour we can drop into that and then keep expanding higher. Or if we do not get that, and if we do not get the expansion higher, we would just need for more data. That looking good, but still that is just the first tap, and we haven't broken structure. Eventually what would be ideal is if we get above here. So we're gonna have that also in our radar, and just watch that. So now it's 1:21. Let's get back to our indices where we left NAS and see what it did. Okay, so see how I was managing my trade, and I said, okay, this does not look good, and I don't mind getting out of that trade before it even hit my stop loss, and we got break even on that, right? So that's what I suspected that would happen. So now that imbalance, it would be ideal if it held price. So now that we all know the story of this, we're gonna remove that, and we're gonna keep, now we have some kind of direction. So now we're gonna look in that direction until another target is met. That was AM session high, but above that we have this juicy, very juicy liquidity up here, and see if we can target that. But again, it's too close to the target, and there's not enough reward for the risk, unless we get below here somehow, and then so some kind of willingness to go up. So it would be a lot of waiting game, a lot of waiting game. So yeah, we're trying to see if we can get this to hold the price and then push up here. And in the meantime, we're gonna check dollar also. Yeah, going down, looking good, slowly gravitating down, and it probably would be just keep dropping until it gets met with some kind of liquidity that is significant, some kind of liquidity pool before we can see any kind of reaction. So I would say that, and this would be a huge one, this one right here. So this can probably cause something to move in dollar, but until then, all these wicks, it's just telling that you want to get down there. So looking at 15-minute on Dow, slowly showing strength, it is breaking out, and S&P slowly same thing, it's trying to break out. So once that happens, right, then we would look what's next, that is buy side. Right, with that 15-minute we tapped, just chopped around. So after a chop, like a big chop, what I want to see is big expansion, because it's already done that damage, or time distortion, like tricking people, like, oh, this is too boring, it's not doing anything, like short that nature. Excuse me. I woke up like 7, yeah, a little early, before 7, and then I started looking what the price was doing. It was good. It was good. Yeah, like when I was before the opening, what I was looking at exactly is this area right here. So the news, I liked how we went below yesterday's New York session, PM session low, and we also went below the London low of Friday last week. We get down, and then as soon as we start getting down, before the candle was closing, I could see, I was looking at it in 15 minutes, so I'm not looking at the big moving candle and then, oh, what's it doing, what it's trying to do. Like, I want to see till the end of the candle. So it came down and then grabbed liquidity and slowly started pushing up. Like, that was good. And I was entering NQZ. I think I was on NQU. Okay, I got one before that news, but then when I saw, I was moving. This is 15 minutes, so it is gonna have so much executions in there, but it's okay. You can see, yeah, I gotta work on this, try to find quality setup, but also need to understand that I'm scalping or taking multiple positions during the day, so there would be executions and getting in and getting out like many times during the day. So that was that, and now let's focus on this. Okay, so again, same thing, all these liquidity. Now that is looking super. I don't use trendline, but I used to see, oh shit, I see something, like, just to use as a tool, like what other people might be looking at, like, oh, buy, it's going up. I want to see that trend line broken, if I'm looking too long. I do the opposite. That's what I try to do, because everybody be looking at buys like, oh, it's going up, 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 up. Before it goes up, it needs to come down. I need that manipulation before I can get in. Alright, nothing much. I don't think it's gonna be a crazy afternoon. You know, it's the same thing. I can sit here all day, but I just wanna cut it short here, and then put alerts and see if there's something that interests me, or if not, I'm just gonna continue with my day. So that is it for me, guys. Thank you so much for tuning in, and we got all the targets on the upside to meet. But before I cut it off, I just want to type a big thank you, right? Big thank you. And I'm gonna make this, I don't know, I think that's the biggest. That's weird, but alright. Thank you for tuning in, guys. See you in the next one.